Drama at Disney. The company named Nike's executive chairman Mark Parker as its next chairman, while opposing activist investor Nelson Peltz attempt to join its board. Yahoo Finance's Alexander Canal joins us now for the latest. Nelson Peltz, really a heavy hitter, right? And it's interesting that Disney says no thank you.
Yeah, I thought it was really interesting in this release where they're saying, look, Mark Parker is going to be our next chairman of the board. He's also the executive chairman at Nike. But in that same release, they also directly addressed this proxy fight with Nelson Peltz. And just to back this up a little bit, Peltz's Trian Fund purchased an $800 million stake in Disney in November. Peltz also has an activist campaign with Unilever. He is chairman at Wendy's, but he now wants a seat at Disney's table and will appeal directly to Disney shareholders to win their support for a spot on the company's board. But as you mentioned, Disney made its position incredibly clear. In that release, it said, quote, while senior leadership of the Walt Disney Company and its board of directors have engaged with Mr. Peltz numerous times over the last few months, the board does not endorse the Trian Group nominee and recommends that shareholders not support its nominee and instead vote for all the company's nominees. So really not holding back there. And Trian did say it's not looking to push out Bob Iger, even though they did not really approve of his surprise return in November. Rather, they really want cost cuts, they want structural changes, and they want to find the next Disney CEO, which of course the company wants as well.
Allie, it's good to see Nelson Peltz hasn't lost his touch for creating a slide deck in a 35-page slide deck called Restore the Magic. He just goes through this whole presentation, almost takes me back to what he did at P&G with an extensive overhaul playbook. But part of this, Allie, as you've been reporting here for us, is he wants a change in the CEO. What, in terms of succession, is he looking for here?
And I think everyone wants to approach this a lot more thoughtful this time around, especially considering everything that happened with Chapek. And Mark Parker, even in the release, said that the process for finding a new Disney CEO, that has already begun. And it does include a newly created committee chaired by Parker, which will update the board on succession plans, including reviews of both internal and external candidates. And what you're seeing on your screen now, it's a short list. Those are some of the names that have been floated out, and they include Dana Walden, head of general entertainment content, Alan Bergman, the chairman of Walt Disney Studios, and Josh D'Amaro, who heads the park division. And then we could possibly even see some former employees return, like Tom Staggs, Kevin Mayer. So this is something that Disney really wants to focus on. Bob Iger is going to be a huge part of that decision. And Disney has really thrown its support behind Bob Iger. In that release, it did note that during Iger's first turn as CEO, the company's total shareholder return totaled 554%, topping the S&P 500's 244% return over that same time period. So they are very confident in Iger, but this ongoing search for the CEO is going to continue. This ongoing proxy fight will continue, and it's all going to come at a head at Disney's annual shareholder meeting in 2023. We don't know the date of that yet. Last year, that was March 9th. So perhaps we'll have some answers in the spring.
It's funny the way that Disney parses the stock performance, right, to make it seem more favorable. I mean, they had their worst year last year ever for the stock price. And so you wonder, when does confidence on the part of Iger turn to hubris? Like, he's here, everything's going to be fine now. He's going to fix everything, right? And so as a shareholder, you would have to wonder, does it behoove them to ignore the advice of someone like a Peltz?
Yeah, and I think it's just going to be this ongoing conversation. As you mentioned, the stock lost 45% last year, its worst stock performance since 1974. And Iger faces a lot of other questions, too. Streaming profitability is definitely number one. The stock is bleeding money on the streaming side of the business. You also have this question about what to do with ESPN. Do you sell it off? We have Hulu. Disney still needs to purchase Comcast's 33% stake. So there's a lot going on at this company that I think shareholders, investors are concerned about. And if you take a look at what's happening in pre-market trading right now, it's up almost 2%. So you have to wonder what their thoughts are about Peltz going forward and what ultimately they will vote on come that shareholder meeting.
And of course, we should note Parker and Iger declined to be interviewed by Yahoo Finance, and Trian's folks didn't feel like getting back to us. Allie Canal, thanks so much. Appreciate it.